ನಕ್ಷತ್ರ ಜಯಘೋಷ ಸುತ್ತನಿಂ ಭೂಲೋಕದರುಚು ಕೆಳಗಿಂ ಮೊಳೆಯುಳುವು ಕೇಳಬರುತ್ತಿ ಮೂರು ಕೂಗೆನ್ನ ಹೃದಯದಲ್ಲಿ ಮೇಳೈಸುತ್ತಿದೆ ಸಂತೆ ಮಂಕುತಿಮ್ಮ. Very good evening members. Sri Ravindra S. Kore, Chairman of Bangalore Branch of SRSHAP ICI, wholeheartedly welcome you all for the 97th Jnanadasova live webcast program from Bangalore Branch. Today's topic, as the 2 days we are having a special session on the investor awareness. Yesterday CA Rudramurthy has taken this session, and today is Anil Bharadwaj is handling session on Corona, a boon for equity investors. On behalf of all the viewers and managing committee members of Bangalore Branch, I wholeheartedly welcome CA Anil Bharadwaj for the today's session. Welcome you, Mr. CA Anil. Dear members, on behalf of managing committee of Bangalore Branch, I wholeheartedly welcome all the active viewers. Because of your active viewing these programs, we have today reached the 97, and it is the second program of the year 2021. As I mentioned, this is a 2 days investor awareness program. Yesterday Rudramurthy has handled on derivatives, and today Anil is going to take session on Corona, a boon for equity investors. Dear members, note that after this we have a sessions on young members mentorship on 6th and 7th. It's from Success Beyond Dreams by CA Dheeraj Sharma, Diversifies Career Opportunities by Narlip, but from Doha chapter, Vice Chairman of Doha chapter, and again Art of Sealing Up the Practice, Technology and CA. This is planned in the next week, 6 and 7. After that, we had our Ashtavarana, all 8 brands together coming. Earlier we have planned for having session on 15th and 16th. So today, due to tax audit extension, we have postponed the date to the 22nd and 23rd. Our ITT staff will share the link. Kindly I request you to register for that program, because that will be a 100th Jnanadasova live webcast program. Because 99 programs we are not charging anything, because it is an inconvenience. It may be hit to the inconvenience, but 100 program, it's a very nominal amount. We are charging ₹500 for 2 days. So many stalwarts of the professions are taking part. So once again, I wholeheartedly welcome C. Anil Bharadwaj and all the viewers for the today's session. So I request our Bangalore Branch Treasurer Divya to formally introduce the today's speaker. Over to Divya.
Thank you, Chairman. To give a brief introduction about our today's speaker, CA Anil Bharadwaj is born and brought up in Bangalore, chartered accountant by qualification. He has completed his schooling in Vidya Vardhaka Sangha High School. He has completed his PUC in MES Main College, Malleshwaram. He has completed his degree in ASC Degree College, and post-graduation, Master in Business Law, National Law School, Indian University. He is senior partner in Bharadwaj and Hosma Chartered Accountants. He is visiting professor in Mount Carmel College Center for Post-Graduation, AC College for Postgraduate Studies, Sheshadrapuram Institute for Global Management Studies, Ramaya Institute of Management Studies. He is also member of Internal Quality Assurance Cell constituted for NAAC in Vasvi Vidya Niketan College, Basangudi, Bangalore. He is also member of Board of Studies in Mount Carmel College, co-op member of Syllabus Review Committee, Board of Studies, Bangalore University. He has served as Students Union Secretary in MES Main College and has been awarded the Most Talented Student Award 2012 from ASC Degree College. He has also been awarded as the Best Comedian for 3 consecutive years by Bangalore University and Kannada and Culture Department, Government of Karnataka. Also, he has been awarded Best Mimicry Artist by Bangalore University. With this very brief introduction, I welcome you for today's webinar, sir. Over to you.
Yeah, members, Anil is also a good cricket player. He used to play cricket along with us, and next week definitely we are having cricket match. We are waiting for that, and he is having an extracurriculum activities. He is a good singer also. In between, we can help our members. At least you can spend 5 minutes of your time or last or first, Anil. So thank you, Anil, for joining today. So over to Anil. Unmute. Anil, unmute.
Thank you very much for the chairman, sir, C. Ravindra Kore and Divya for introducing me in a very brief manner. Thank you very much. And I also welcome all the chartered accountants who are being part of this webinar and listening to us and acquiring some of the knowledge, exchanging some of the knowledge between us. So my dear friends, you'll have to understand ಪುಸ್ತಕದಿ ದೊರೆತರಿವು ಮಸ್ತಕದಿ ತಳೆದ ಮಣಿ ಚಿತ್ತದೊಳು ಬೆಳೆದರಿವು ತರುತಳೆದ ಪುಷ್ಪ ವಸ್ತು ಸಾಕ್ಷಾತ್ಕಾರವಂತರೀಕ್ಷಣೆಯಿಂದ ಶಾಸ್ತ್ರಿತನದಿಂದಲ್ಲ ಮಂಕುತಿಮ್ಮ ಅಂತ ಡಿವಿಜಿ ಹೇಳಿದ್ದಾರೆ. The meaning of this poem is we have to acquire the knowledge not only from the book. We should not only get the bookish knowledge, we should also implement the same wherever it is possible. We have to practically implement it, understand the very crux of the concept, go inside deep into it and understand. So today it is an effort for all of us to understand more about the equity market. Being the chartered accountants, you're all well aware of the market, you're all well aware of the financial management, but today we will focus morely on the equity market that happened during 2020, how the equity market performed, what are the changes, how you can make money in equity market during this pandemic period. Still, Corona is not gone. We are listening for a new type of Corona. A second wave is emerging in many countries. So we have to fight back both ecologically, environmentally, and we should also see if we can financially fight back and have a financial freedom during this Corona time. Unlike all other people who are not performing well, we being chartered accountants should apply our mind properly and make some money from equity market apart from all other services that we provide. So today we are here to understand more on equity markets during Corona. Corona, a boon for equity market. So you're all able to see the screen? Yes. Host, is there a possibility that people can speak in between?
No, sir. They can
have an interaction with me in between?
In a chat, sir.
In chat only. Okay, not over mic, is it?
No, sir. And we can't see your screen, sir. Sharing is blank here.
Sharing is not fun. My dear friends, today is an equity session on equity market during Corona. I want to tell you, if you see this Corona symbol, it is not a virus. I feel it is an opportunity for equity investors. You have a tree of opportunities, various opportunities during Corona time, especially with respect to equity market. I would like to start my session with a video. We'll see the video and understand it. This video, audio is...
Anil, sir,
Huh.
if you want to share a video on top, you have a share option, right? Under that, you find share multimedia files. Through that, you please share the video.
Share multimedia, where is it coming?
So on top,
share
you have
file.
share option, right?
Yeah. Under that, my screen,
stop sharing,
file,
sir.
including video.
Yeah, including video. So you have to take that file and you have to share it.
Just a minute. Sorry for the inconvenience, my dear friends. Yeah, now you can see. People can see this. Hello? Yes, my dear friends. So this is all about the video. So hope you have understood. See, this is the exact situation that we have seen. This is the exact situation that we have seen. During the Corona time, we have a lot of challenges, but for an equity investor, it is an opportunity. It's a good opportunity for an equity investor during Corona time. The number of investors, the number of small investors, retail investors have doubled. In fact, many companies have got thrice their clients in stock market, in equity market during this Corona time. People working from home are finding some time and they are having some interest, they are developing some interest and starting to invest in stock market post this Corona that has affected the country. So my dear friends, today the focus on equity market is mainly from CA's perspective. CA being the chartered accountants, being the investor, what they have to focus upon. Income avenues for chartered accountants. What are the income avenues for the chartered accountant? If I tell you what are the income avenues for the chartered accountants, you'll surprise the way I am explaining. A, B, C, D, E, F, G, and so on. What? Income avenues is A, B, C, D, E, F, G? Are you doing Kindle? No, my dear friends. Now you see. A stands for audit and assurance. B stands for bookkeeping. C for consultancy. D for data analytics. And E for equity markets. F for financial management. G for GST. So A, B, C, D, E, F, G stands for audit, bookkeeping, consultancy, data analytics, equity share, equity market, financial management, and GST. My dear friends, among all these, data analytics and equity market are, data analytics especially is an emerging trend, and equity market, especially post this post COVID, which has affected the country, so market has tremendously outperformed. From 12,000, it came to 7,800, 7,500, and again gone up to 14,000. So what is versatility? So during this versatility time, how we can invest and what are the parameters we have to keep is what we have to discuss today. Do you believe how the markets have reacted during the 2020? Yes or no? From 12,000 to 7,800, 7,000 to 14,000, we have seen mother of all bearish market and mother of all bullish market in the same year. In the history of the time, so much of versatility we have never seen. No investor, no country has seen such a tremendous variation and versatility in the market. Do we have to invest or stay away from the equity market during such times? What people say, what do you say? Yes? Post, how to see the chat? Can I look into the chat window?
Yes, sir. On top, if you just go on top of screen, as a
Yeah.
drop down comes, you can see chat option over there.
Okay, got it. Yeah. What do you feel, members? Do we have to stay inside the market or we have to stay out of the market? Yes, I have spoken to a lot of people during COVID times and asked what are their preferences. Many people whom I did not think that they will invest in equity market have started investing. Who did not have any interest towards equity market have started developing the interest towards equity market. They want to become rich. Everybody, each of us want to become rich. So equity market during this time is one of the best opportunity for all of us to focus and make huge money. Whether to invest or do a speculation. What do you say? What do you say? Can anyone tell me? Is investment better or speculation better during COVID times? Yeah, Sumana is saying investment. Yes, members, you can actively participate in the chat, not just owning the screen and doing something else. Date has been extended. Now we are still in the edge of 2nd January. Investment is better. Someone is saying investment is better. Yes.
Members, please put a message to the presenter, not to the host, please.
Oh. Investment. Yeah, I am receiving mostly the investment. Answer as mostly the investment. My dear friends, we'll have to be careful in understanding this. People, especially chartered accountants, who are more focused on their career, who are more focused on their work, for them it is investment which is wonderful because they can spend less time. Yes, someone said they can spend less time and have better earnings. Whereas speculation requires lot of analysis and lot of time to be spent in the market and do analysis, when to exit, when to enter. You have to keep analyzing and doing. So investment is compared to speculation is more apt for the chartered accountants. For others who are mostly focused on stock market, who are not focusing on auditing and other assurance, other chartered accountant related service, they can focus on speculation and make money, but not the people who are focused on CA related activities like auditing, bookkeeping, regular services what a chartered accountant gives. If we are focusing on that, for us, investment is a better option. Why? Because we can spend less time. We have to analyze the fundamentals of the company, select the good shares, select the good company and invest and stay away from the market for long time. Yes, of course, risk appetite is something very important. Whether it is investment or speculation, we have to always keep in mind that risk appetite of a person is very important. What are the different kinds of risk? Whether you are a risk neutral, whether you are a risk averse. Based on that, if you are ready to take more risk, then you can start doing speculation. If you don't want to take risk and your risk is very less, your risk appetite is very less, then you can focus on investment, my dear friends. Statistics. Return from different assets we'll have to see. If you focus on this, some of the statistics is very important to understand during Corona time, especially COVID time. See, Bitcoins have outperformed during the year. Bitcoins was 5,67,850 on 26th of March. When was the lockdown announced? When was the lockdown announced? 23rd of March. So during 23rd, 26th of March, the Bitcoin price was only 5,67,850. 31st December 2020, the Bitcoin prices have increased by 272.5%. 272.5%. That is 21,15,000 rupees is the current Bitcoin price. Nifty on March 26th, when the Corona was in boom, it was 7,500. Now on December 31st, the last day of 2020, it has reached 14,000. It has closed at above 14,000 at 86.6% higher return. Only less than a year, people who have invested in market could have made 86% return. That's why I said Corona is a boon for an equity investors. Sensex similarly has performed about 83%. But if you see silver, gold and dollar, though the prices have gone up, but it is not as much as Nifty and Sensex. Of course, Nifty, Sensex are less than Bitcoins, but we are mostly focused on equity market. So Nifty and Sensex have outperformed more than 75% return in a single year. If we calculate on annual return basis, it has given more than 100% return, my dear friends. No fixed deposits, no investment will give such a return at a very less span of time. Now that interest rates are also reducing, if we say we invest in FD, then we are the foolish people, because we are not getting more than 5-6% of return from any FDs or bonds. So gold has given us almost 25% of return, and dollars have gained about 62 paise. Now the dollars are also reducing. Why the dollars are reducing? Can anyone say? The rupee is getting appreciated. May I know the reason why the dollar is reducing? Yes? Printing more currency is very good. Sanjay Dev, correct. US is keep printing high dollars, because of which the dollar index is coming down. So, my dear friends, so as the dollar prices are coming down and rupee is appreciating, the gold and dollar usually have an inverse relation. You can see whenever the dollar is appreciating, the gold value reduces. Whenever the dollar rate decreases or depreciates, the gold price increases. So we have to see, Joe Biden is coming in January. He is taking the oath in January and becoming the president in January. We'll have to see if we can see any stoppage or reduction in printing of currencies in US. So the next one, my dear friends, the purchasing power, the purchasing manager index for manufacturing in September was 56.8, highest since January 2012. It was 27.4 in April 2020. The purchasing power index had reached in October 58 points. 58 points it has reached, but November it declined, but again we'll have to see in December it goes up or not. So PMI for services in September was about 49.8, which is a fifth consecutive month rise. It was just 5.4 in April 2020. This shows us that the economic activity have actually started, and they have been performing at full-fledged. Many clients are asking me, sir, what do you think on market? What do you think on economy, whether the economy is growing or not? Yes, of course it is growing. You see, RBI's forecast on GDP to be positive by Q4 and contraction of around 7%. It is recent statistics I am giving you. They had predicted about 9.5% in September. Now they are saying it will dip to 7%. So it's a positive move for the country. It's a positive move for the country for financial year 21. Inflation will ease by Q4 to targeted levels. By Q4 of the year, we can say that the inflation will come down. Inflation will come down, and more money will not chase to less money. So that means we can say that if inflation comes down, it is better for the, and what I am trying to say, if it is in a regular trend, then it is good for the market and we can invest and expect a better return. Repo rate unchanged for a long time. Now they are again reviewing. FDIs have reached more than 50,000 crores. You believe it or not, my dear friends, for two consecutive months, FDIs have increased by more than 50,000. FDIs have invested in India more than 50,000 crores. That's highest they are investing. That means there are economic activity that is taking place. It's a right time for us to invest. Some people are saying that, do you say 14,000 is over predicted? Is it over number in the Nifty? Maybe about 5-6% correction that may happen, but it will not come down to the previous level. It will not come down to 11,000 level, 10,000 level. It may come down from 14,000 to, it may come down up to 13,000. May not be less than 30,000. We can expect the correction only up to 13,000. And the latest news that we have received yesterday, the GST collection for the December 2020 is highest ever since it is introduced. It has reached 1,15,000 crores. 1,15,000 crores for December 2020, which was 32,294 in April. Yes, someone is asking which company shares to invest. I will tell you. So now I am putting why the shares are increasing. That is very important. Why the shares are increasing is something which is very important. From these, if you see GST collection, someone said you can compare others, this one also. If we see from 2017, only three times the GST has crossed 1 lakh. And this is at the right time. During COVID times, it has not crossed 1 lakh. So we have reached the highest in December. So it is something which is very, very important for the market to understand that the companies have started their economic activity completely. I don't agree with the statement, someone saying that the India has come down, it has gone back to 20 years and it is very difficult to go further and to see the economic development. No such thing. My dear friends, why FDIs are investing? Why FDIs are investing? It is mainly because India is becoming an emerging market in all possible ways. It will surpass China in few years. It is taking all the measures what it has to take to cross China and take all the businesses that can come from all over the country. We can see in recent past, many foreign countries have come and started investing in India. So this is the right time for all of us to focus on market and make more money from market. So I want to show you one more video. See, this video is something very important to understand how we have to behave in the market, how we can positively understand what we should know, what we should not know. We should not only go by our normal judgment, we have to go by facts. See this and understand, we will discuss more about it. Can you see the video now?
Yes, sir.
Yes. Did you understand, my dear friends? How beautiful is this video? Can we discuss on the video what it says? The person who came to the cafe had his what he had. He had a coupon. He thought the coffee and everything whatever he buys is free, but in fact he ended up spending all his money because he did not know all the add-ons were additional to the coupon. It was not included in the coupon. He had to pay for it. So every person, whether we are chartered accountants, we should not think of anything. We should have a facts ready and then invest, not just go by the pulse or just go by the market sentiments. We have to understand and go further in the market. Analysis through charts. How, sir, 7,800, it has gone to 14,000. From where it came to 7,800, we'll see now. Nifty. If you see Nifty, now I am focusing on some of the charts. Can everybody see the charts? Can you see the charts?
No, sir, we don't see anything.
Okay, just a minute. Yes, now?
Yes, sir.
So now I want you to analyze some things on charts. So I have taken a lot of some of the important companies chart and want to do some of the analysis on these things. See, my dear friends, Nifty 50, which is an index and the NSE, was at 10,000, between 10,500 and 11,000. It was during the first week of, in the last year, let's say 2019, it was on 10,500 to 11,000 range. The same thing was during September 2019. Early January 2020, the range of Nifty was somewhere between 12,000 and 12,500. 12,000 and 12,500. 27th of January is when India identified the first corona infected person. So from January, if you see, till March, though there was a small dip here, though there was a small dip in February, from Jan to March, it was almost constant between 12,000 and 12,500. But the moment when during March, during first week of March, when people started lockdowns, when Prime Minister announced the complete lockdown of the country, from 12,000 ranges, it came down to 7,500. It even touched 7,500. We can see in April. Between March and May, if you see, it has touched the lowest 7,500. The mother of all falls. Just in few days, from 12,000, it has come down to 7,500, my dear friends. Again, in April and March itself, in April and May itself, it recovered. From 7,500, the correction took place and came up to 10,000 level. And from there, again, it flipped down during June. And from June, it never came down, my dear friends. Never came down. From June, if we would have invested in June, now the market stands at 14,000. Market starts at 14,000, my dear friends. From 7,500 in June, in 6 months, it has doubled, almost doubled. Yes or no? So this is how the markets have performed. In fact, if you see the annualized return for Nifty 50, then it is more than 200% return. More than 200% return. So yesterday, Mr. Rudramurthy would have spoken about F&O, how the call option, put option have performed during for the Nifty 50 and other things. Bank Nifty has been underperformed, but Nifty 50 has overperformed. All those things he would have spoken in the yesterday's topic. I'll only focus on equity market today. So if we see now Nifty 50, we focused on index. Now I want to focus on companies. Infosys Limited. Infosys Limited, if we see an IT sector, I want to focus on Infosys as well as TCS in IT sector. So IT sector has outperformed because we have to understand there are several reasons why it has outperformed. Dollar appreciated during this time. When dollar appreciates, all IT companies gain. Why they gain? Because of exports that they are doing. Once the price increases, they have tremendous inflow, they have tremendous foreign exchange gain. That's why they perform wonderfully. And a boon for the IT investment is the corona is boon for IT sector mainly because their cost is reduced to the maximum extent with respect to rent, maintenance, and other things. You may say, no sir, companies are paying regular rents. Rent may be paid, but my dear friends, there are many things associated with employees coming to the office and working. If they are coming to office and working, you should completely employ the housekeeping. You should keep providing other facilities. All those costs have reduced. You should keep them, the companies take them on outing, team building activity, going out for lunch, going out for dinner, all those extra costs, additional costs, team building costs, whatever was there for the companies has come down, which is resulted in cost cutting. Once the cost cutting takes place, profit improves. In September Q3, nobody had expected a profit appreciation of about 17-18% for many companies, though their top line have come down by 7 to 8%. Many companies' top line have come down by 7 to 8%, but their bottom line have increased by 17 to 18%. This is mainly because of cost cutting. And few people said it is a one-time event. I don't think, my dear friends, this is a one-time event because this will continue for at least one more year. And for us to get a good return, this another 1 year is more than sufficient. And next we can plan on a different strategy. What do you say? For another 1 year, if we have a market known, if we know that the companies are going to perform well with their profits, then what to worry? Why to worry? First, we'll focus on this year. Invest now on good stocks and make money. How it has performed, I will show on chart, my friends. Last time we saw Nifty. Now I will focus on Infosys. There were many rumors and things last year on forging the documents and providing a wrong information by the Infosys and resulted in huge dip in the price. The prices of Infosys had actually come down to 500 rupees from 800 rupees range, from 700 to 800 rupees range. It came down to 500 to 600 rupees range in April. People who have invested in April at 500, 600 level and now got 100% profit, my dear friends. More than 100% profit. At 500 level, if you have invested, at 600 level, if you have invested, now the share price of Infosys at 1,260. Yes or no? This one share would have been sufficient. Take out your FDs and start investing in equity market. Take out your monies and start investing in companies like Infosys, TCS. If we see TCS, similarly it has performed. From 1,000, 2,100, 2,200 ranges, it suddenly came down to 1,600 ranges during pandemic. But again, it got corrected. It went up to 2,900, 3,000 rupees it is about to reach. Around 3,000 ranges. From 1,600, it is also giving double the profit. It is also giving the double of investment. So we, being a chartered accountants, have to focus on the fundamentals of the company, see whether the company is performing well, how the balance sheet is performing, how PE ratio is calculated, what times the PE ratio has the market share, all those things, number of times the PE ratio, all those things we'll have to carefully see because we are financially literate. All of us, the chartered accountants, are financially well literate. So we have to adopt what I told in the beginning. Pustakadi doretarivu mattakadi taledamani. Chittadolu beladarivu tarutolada pushpa. So from The knowledge what we have acquired from book, now it is the time for us to put it and implement that in the market and gain some money. After all of us who have become chartered accountants have become thinking that we have to make lot of money. Not only chartered accountants, everybody's desire is to make lot of money. There's a saying in Kautilya's Arthashastra, it's a subhashita in fact in Sanskrita, Vittahinam purusham tyajanti darascha putrascha sahodarascha tam vittavantam punareva yanti vittam hiloke purushasya bandhuho. That means vittam means money is something very important. If that money is not there with us, everybody will leave us and go. Even wife, children, husband, everybody goes away. But if the same money comes back, comes back to the person, then with the entire world will become the relations. They will become the friends for that person if he earns back all the money. So money is something very important. We have to earn. ITC Limited. If you see ITC Limited, my dear friends, it is also the same thing. In July, it was under the level of 200, came down to 160 during 150, 160s range during November, last month. Now again it is at 213. So in 1 month, if you see 165 from 210 minus 165, how much? 45 rupees in 1 month, 1.5 months, for an investment of 1,60,000 rupees. So 25% absolute profit. And annualized profit, if you see, again 100%. 25 into 2 months. 25% into 5 times. How much? 150% profit in ITC, my dear friends. 150% profit in ITC in just 2 months. Annualized profit, I said. HUL being one of the best shares ever. One of the best shares ever. In long run, if you see, you can see it's like a heartbeat. For 1 year, it is acting like a heartbeat. But believe me, my dear friends, over a period of time, it has performed. I have seen this investment from 250 rupees in 2012. From 200 change in 2012, I have seen, and this has gone up to 2,300 ranges, 2,400 ranges. 10 times return in 8 years. Even if you see 5 years chart I have shown here, 5 years back during 2015 May, the shares was at 600 rupees. 600 rupees during 2015. But now, it's a tremendous share, my dear friends. Share of a lifetime. With all other players coming into the market, still HUL has maintained its rally and keep going over a period of years. I still believe it has a potential to go up because it is strong with its fundamentals. Sun Pharma. No doubt we just saw IT sector. We saw FMCG, ITC and HUL being FMCGs, and we are now seeing Sun Pharma. Now seeing what? Sun Pharma. Sun Pharma also performed really well. It used to perform wonderfully 3 years back. Now the current scenario of Sun Pharma, if you see in April it has come down. I forgot to tell one more important thing, my dear friends. Now this year it's time for pharma industries, because they are all developing the vaccine for COVID-19 virus. So for who will get success is only a timing, only the time that tells who will win the rally. But everybody who is participating in this rally will definitely win, if not today, definitely by tomorrow. Okay, the first person AstraZeneca may get the vaccine at the earliest, but I don't agree. Only AstraZeneca makes huge profit. All pharma companies may get the vaccine and sell it out to the people and make a huge money from what they were before. So pharma industry being a wonderful industry for 2021 that we can bet upon. SBI, though the bank Nifty is not performing well, it is worthwhile to say, it is very much worthwhile to say, SBI is performing very well. If you want to see the other companies also, you can see. But SBI, see, from April it was in the range of 180 to 190. In April it was in the range of 180 to 190. It came down to 150s to 160s. 150s to 160s, my dear friends, in June. From there, it has again gone up, but came down in October, but not reached the lowest level again. Is it not? It was only a small correction. Again, from October, it has not come down drastically at all. It has gone up to 280. 100 rupees increase in the share price. 100 rupees increase in the share price, my dear friends, in a matter of 3 months. If you see 180, in September to October, it has now gone up to 280. So from 180 to 280, 270, 50% immediate increase, and annualized, then if you see 15 to 4, 200 times increase in annualized returns. So even the banks have been performing wonderfully, though the bank Nifty is not performing well. So some of the banks, not all the banks I say, PNB has declined, Yes Bank has come down, though few people made good money in Yes Bank from the point where it came to 6 rupees. From 6 rupees it again went up to 28 rupees and it is running in the same range. So these things you'll have to keep seeing. One of the very important things that I want to tell you here is focus on few stocks than focusing on all the stocks. Write it down, my dear friends. This is very important to focus on few points, few stocks. Completely study on the few stocks. A particular stock you have to completely study. You have to study their balance sheet, annual returns, their results, how they are performing, what are their basics, who are their managers, how they are performing. All those things we will have to see thoroughly, we will have to understand and invest therein. The advantage for the chartered accountants over others are, they can understand everything very easily. We know what is PE, we know what is top line, we know what is bottom line, we know how to read the balance sheet, we know how to read the P&L account. Is there any modification? Is there any mal dressing or window dressing in the balance sheet? What are the notes to accounts? How they have given, what qualifications the auditors have made? What is the emphasis of matter paragraph? What they have given? Why they have given? All those things we can understand better than any MBA student, better than any other graduate. Yes or no? So we being the ultimate financial literates of the country, we are in a best position to understand the market and invest therein. So I spoke about ITC, SBI, Infosys, TCS. Similarly, there are many other stocks which have outperformed during the year. Okay. Next, we'll see which companies have actually, which sectors have actually outperformed. Pharma has outperformed, information technology has outperformed, IT sectors have outperformed, and FMCG. All these 3 points, 3 companies, charts we have understood and seen and proved that it has outperformed. My dear friends, now that it is a time for value broking, people are coming up with lot of avenues They are coming up with they are giving lot of opportunity for the investors to come and invest at a very less brokerage charges, at a very less charges. Now it's time for us to focus more on the market and make some money out of the market. We should make the maximum utilization of the current situation and start investing in the equity market, if at all if we are not. If we have already started investing, then we have to see and focus on some of the vital stocks that we can make money out. Yes, stocks that have underperformed, the sectors that have underperformed, in fact, banks, especially few banks, PNB, Bank of Baroda, all these banks have underperformed during this year. Yes, banks have underperformed during this year. Small NBFCs having a lot of problems, especially because of collection. People are not, many people, especially under manufacturing, this one, opted for moratorium. When people have opted for moratorium, their regular income got hit. That's why the bank nifty also came down. When the moratorium is opted by the person, the EMIs were stopped. Though they made additional interest on those outstanding amounts, still the cash flow got stuck. We all know cash will not have value if it is kept in the bureau, if it is kept in the cupboard. It has to be in functional. It has to keep circulating. Only if the money is circulating, then we will have the value for the money. Understood? So banks and small NBFCs have underperformed. They are their highest hit during this COVID. Infra and real estate are yet another sector where there was a bad performance because of labor issue, because of the lack of demand, all those things. See, when during this pandemic time, we should understand that people were not bothered to make new assets. They were not bothered to buy the new house, new sites. They were bothered only to save their life. They were bothered only to save their loved one's life. How to be safe than accumulating the assets. One of my clients said, "Sir, why we have to make so much money? I don't understand. I have been making lot of assets. After Corona, I understood, what if I die? And if my children does not know where I have invested, where are my assets? Now I have stopped and started accumulating all my assets, sir." We have to even think about it. Not only think of making huge money, we should also see how to accumulate all these assets and gather it together during the tough times. Because life is very uncertain. We don't know what will happen tomorrow. Myself have experienced that 2-3 friends of mine, 2-3 colleagues of mine were affected with Corona. They tested positive. Just one day back, they tested positive. We had discussed, we were together. Yes or no? That day I did not know that they will get Corona. Yes or no? Life is that uncertain. We have to be very careful during this time. So we have to make enough resources for all uncertainties and then start investing. So because of this moratorium, because people were more bothered on saving their life than on the luxury, than on buying the asset, the infra and real estate were also down. But now, my dear friends, it is not the same as of now. In 2021, already from November, people have started their momentum in buying the assets. People have started coming and looking into the sites, looking into the buildings, houses, they are starting to invest on real estate also. So this 2021, we can also see the great growth in banking, small NBFCs, infra and real estate. These are all the stocks which were outperformed. It's a historical data I am providing you. But forecast, when I am forecasting for the coming year, that is 2021, for this year 2021, I am saying not even banks, even NBFCs, even infra and real estate companies or sectors will also outperform, because now the economy have opened up. People have realized that the country is coming out of COVID, and they are assuming that second wave of COVID will not come in India. We are hoping for the same, that it will not come and affect again like last year, unlike other countries. So infra and real estate banking companies are also opening up and moving it to and rallying now. So we can even focus on banks and real estate stocks. Points to keep in mind while investing. What are the points that we have to keep in mind while investing, my dear friends? We have to keep investing. We have to keep investing on regular intervals. We have to keep investing on regular intervals. On this keep investing on regular intervals, I will show you a video. We will see this video and come back. Can you see the video now? Can you see the video and hear it? Yes. I will show yet another video, my dear friends. Just a minute. So investment on regular basis is something very important. We just saw a beautiful video on keep investing regularly. So the man who was in the video, they both were friends, and one of them always used to put aside and used to take one brick and started to construct a house. On a continuous interval of time, he kept invested and constructed a beautiful house for himself, beautiful bungalow for himself. The other person was surprised. He was thinking what he is doing all this time. He is bringing only one brick. From one brick, what he can do? Honey, good idare halla. So we have to always start investing small amount on regular intervals. We should not stop it on regular intervals. Small amount over a period of time will fetch us a very long amount. So this video is also supporting to that. So what points we have to keep in mind while investing is a timely and continuous investment, whether it is small or big, based on the investment appetite of a person, and timely evaluation. We have to keep this timely evaluation intact, my dear friends. Okay, timely evaluation is something very important. Whether the stocks are performing, how the balance sheet has changed, the financials have changed, is there any major deviation from the in the balance sheet, or if the management of the company has changed. All these things has to be seen very properly and focusing value than growth stocks. I have to explain on this. There is a difference between value stock and stock which has grown. Can anyone tell me what do you mean by, is there any difference between value stock and growth stock? Yes, participants can tell me the difference between value stocks and growth stocks. Yes, few people can give me this one inputs in chat box. Strong financial ratios, yes. Great future story. Value is for more period while growth can be any period. Very good. Growth for future. Yes, both are very important, my dear friends. Both value stock and growth stocks are very important. There is a beautiful saying, we should always buy from a greedy investor. There is a beautiful saying. Okay. What is that? That is, we should always buy from a greedy investor. We should always sell it to a needy investor. An investor who is needy, who thinks that shares are bearish, shares are bullish, we should sell it to him. We should sell it to him. If we should always buy from a person who thinks the shares are, who thinks that the share comes down, who thinks the market is bearish. Okay, so on these points we can make good money. So value stock means the stocks that have huge potential to grow up. Though some of the value stocks may not have a good price, but one or the other day it will definitely come up with great numbers. Warren Buffett says sometimes he had invested in a share which is only $0.4 per share. The value of the share was only $0.4 per dollar. But that stock has become 3 million rupees now. A great 85,000 times, 8 lakh, 10 lakh thousand times increase in the market, in the rate of the share. So you should always focus on the value than the growth. If the share has good value, if they have great fundamentals, today or tomorrow, that will definitely outperform. Some of the shares may not outperform though they have a value because of the fortunes. But if not today, tomorrow definitely it will make a good stock and gives you a good return. For instances, we can see people who have invested in the stocks like Infosys, stock like ITC, long time ago when they were 20, 30 rupees, 100 rupees range, people have invested. Now they are leading life only with this money, with these investments. So our investment strategy should also be in such a way that we understand the fundamentals of the company and invest in such company and have a good return. Focus on success of the equity investors. As I explained already, fundamentally good company is what we have to choose. There are great parameters we'll have to focus. How their PE ratio is performed, what are their EPS, earning per share, how their earning per share have evolved over a period of time, whether it has an increasing trend, it has a constant trend, it is a decreasing trend. If it is a decreasing trend, why it is decreasing, or if it is increasing, how it is increasing. All those things we have to see. And we should also know, better the PE ratio may not be good. Is higher PE ratio is good for the company? Is good to invest? Or I rather reframe the question. If a company has a greater PE ratio, that means the company is performing well? Yes, Sanjay Dey says, not always. Why? If greater the PE, you should see both numerator and denominator. both numerator and denominator we have to see. Just because the P ratio is more, we should not conclude our saying. If numerator is more and denominator is also more and P ratio is also more, then okay, it's a wonderful stock. The market price is also more, EPS is also more, and EPE ratio is also more. Market rate is higher, EPS is very small, resulting in greater PE ratio, is a worst stock. That means the stock is overpriced. The stock is overpriced. Not always lower PE ratio is also good. A higher EPS with lower market price is good. That means it has a potential to go up. It is underpriced. If EPS is more and market price is less, resulting in a lesser PE ratio is better, because the share is undervalued. In future, it has all the potential to go up. But if both are less, current market value is also less, EPS is also less, then we should not touch, we should not even see that share. So that's all about the P ratio. I just gave an example. Then we should see who is managed, company is managed by whom, who is managing the company. So that is also more important from investment perspective. If the company is managed by good managers who can take the work, who can take a good decision, who can think upon the betterness of the company, have good idea, have good implementing skills, have good discipline, these managers also play a vital role in selecting whether we can invest in that particular company or not. Because while seeing the fundamentals of the company, we should see what are their return on equity, what are their return on investment, and what is their cost of capital. If their cost of capital is lesser than return on income, then the company is performing well, it has more value, it can go and lead to a higher value. If cost of capital is less, it is more than the return of investment, then though the prices of the company are high, it is better to sell and book the profit so that we are safe with that company. Management is the next most important after type of business. Of course, very important. That's what I'm trying to say. So good management is always vital in selecting whether we have to invest in the company or not. Then, especially during Corona time, we have to focus on the companies which are basically very good in digital ecosystem, who can bring everything on screen, who can manage the entire company and all the activities of the office, okay, out of the office, getting the work done from home by the employees. This digital ecosystem, how they are performing online, is more important. If you see Zoom and WebEx, all these things, Google Meet, a greater demand came to all these people once the lockdown was imposed. Earlier, only few people were using Zoom and other things. Now every Tom, Dick and Harry, they started investing in using this Zoom, using the Google Meet, all this Google Duo and Cisco WebEx. All these things have come into a greater usage during this pandemic time. This is the main reason that we should focus on those companies who are good in digital ecosystem. If we take an example of Kodak being a tremendous company, once upon a time it used to control the entire world with its photo album, has become bankrupt now. Why? They were not adaptive. They were not agile to the change in the market. Yes or no? When Titan experienced the decline in price, when watch companies experienced the decline in price, They were shocked to know that it was due to telephone. It was due to mobile phones, which have caused them decline in sales. Okay, so watches have come with smartwatches. They have come up with a new idea of smartwatch. That is the digital ecosystem that I am speaking. So once the market changes, the company should also in a position to adapt to the new change. They should not resist for any change. They should get used to the change and implement all the changes immediately so as to retain the market share, so as to improve their market share than reducing their market share. You're able to understand? See, slowly, though Maruti Suzuki is one of the good companies, very good performing companies. In few months, we can say, in a few years, I don't say months, in few years, we can say Maruti Suzuki going down. Because all other companies are performing well. Now people are preferring cars which are which other than Maruti. Okay, people start now. New entrants have come. Jeep has come. MG Morris Garage has come. Hyundai is coming up with new ideas and cars. Kia has come, and they are offering good and better cars at a good price. So even if Maruti Suzuki doesn't adapt itself for the change that the new generation is asking, then Maruti's share, whatever is there in the market, may also come down. Then companies focusing on reducing the cost. I spoke about this. Now the main focus is on reducing the cost of manufacturing or cost of supply. Okay, company which focuses on reduction in cost price, then they will definitely succeed. They will definitely succeed in their aim and make a good profit and also improve in market. So my dear friends, what I tell is, for the chartered accountants who are mainly into equity market, not just the fundamentals, they should also be very good in technical analysis. Understand everything very keenly, and properly they have to understand the market, not only go by the pulse of the market, understand the movement, expect the future movement with reasonable measures, and then go and invest in the market. So in reducing the cost, as I was telling, in September when the Q2 returns were out, there was a reduction of almost 17. There was an increase in the bottom line by almost 17%. How this has resulted in Corona time, when the analysis was taken, it was mainly because of reduction in cost. Now the companies are getting the good employees from second and third tier cities. Tier 2, tier 3 cities or towns or villages are also providing are also getting the opportunity to work, and companies are getting such people at a very less cost, employees at a very less cost who are very bright. They could not come to city and seek an employment because of various problems. Now that work from home has started, now the digitalization has improved, they are able to perform. At their home cities, and they are contributing good to the companies, which is resulting in increase in the profit. All these things are very important on investment into share market during Corona time. Okay, I would like to show one more video, after which we can open the session for questions. This video is on investment habits, how the investment habit should be there. You're able to see and listen? Yes, my dear friends. How was this video? What did we understand from this video? Can anyone tell me what did we understand in a single sentence? Exactly. So slow and steady will serve. Exactly the same phrase I had in my mind. Always slow and steady wins the race is that we have to understand. Rabbit and this one story we have learnt. Okay. You need not be always slow, but you have to be steady. Okay. I don't agree always to be on slow. You need not be always slow, but you have to be steady. Consistency and steadiness will always yield a wonderful result. Will always yield a wonderful result. And only upon this continuous, committed and steadiness we can make good money. So we have to be very careful. We have to be very careful in understanding that maintain a systematic approach towards investment. Keep investing. Don't regret if the price comes down. Start accumulating and make an average of the price. Start accumulating and make an average of the price. If you believe, being a chartered accountant, that the fundamentals are right, I am damn sure we will make a good money, good return out of the investment that we have made. And we should be careful on some people. We should be very careful on the people. We should not listen to others. We should always focus on our own understanding, our own things. Only then we will understand. I like to quote one Mankutimana Kagga here. Tali mela mela nomme, dali rabhasadi nomme. Tali mela mela nomme, dali rabhasadi nomme. ಕೇಳದೆಯೇ ಬರುವ ವಿಧಿರಾಯ ಮೇಲ ಕೀಳಾಗಿಪನು ಕೀಳ ಮೇಲಾಗಿಪನು ತಾಳ್ಮೆಯಿಂದಿರು ನೀನು ಮಂಕುತಿಮ್ಮ. It's a very apt kagga for this time. ತಾಳಿ ಮೇಲೆ ಮೇಲೆ ನೊಮ್ಮೆ ದಾಳಿ ರಭಸದಿ ನೊಮ್ಮೆ. See, my dear friends, if we see this chart, especially the Nifty 50, if we see the chart, our mind crashes. In March, see, we are looking at December now. Say our mind on March. The share price were at 12,500, 12,000 to 12,500 ranges. When it came down to 7,500, what is the position of the investors as on that day? People would have shocked. Some people would have got a heart attack. Why? They are not ready to see what will happen tomorrow. What will happen the next day? What will happen in future? We have to be very focused. We have to have a lot of patience. Sometimes the movement will be very slow. ದಾಳಿ ರಭಸದಿನೊಮ್ಮೆ. Sometimes the movement is very fast, very vital, very versatile, very volatile. Understood? We have to be very patient enough to see ಮೇಲ ಕೀಳಾಗಿಪನು, ಕೀಳ ಮೇಲ ಆಗಿಪನು. See, in March everything came down, but if you see from March to December it has gone double. So how he brings up the things and how he brings down the things should also be seen and understood. Okay, so predict properly and do. So finally I am ending my discussion with one small video and will open the session for any questions. The last video is very important. I am saying this, we have to listen to this and understand very carefully. Yes, what is the crux of this video? What is the moral of this video? Yes, own your call. You always take your own decision. Don't rely upon something else. Don't listen to someone else. You please judge. You have your own judgment. Correct. Very good. Yes, my dear friends. I'm opening the session for any questions. People can answer. People can ask any questions. If I know, I would like to answer it.
Sir, there are some questions in a Q&A. If you can see that on top, there's next to chat.
Okay.
A drop-down concept a Q&A.
Just a minute. Which factors we have to see while doing the fundamentals? Sir, now especially when we are thinking, we have to see on their expenditure pattern. Their members in the management have to be completely seen, and we have to see on their in the annual returns they will give their future orders for what they have applied, if they have got tenders approval, if they have got future orders. All those things we'll have to see. Their export obligation we'll have to see. Their loans and obligations, that is something very important. What is their return on investment compared to their cost of investments? If you can see on cost of investments and other things, then it will be wonderfully good. And of course, technical analysis, purely we go by charts and other comparisons. Macroeconomic strategies are some of the vital things that we may see. Suggest any share which are fundamentally strong and still available at a lower price. SBI is a wonderful stock, is at only 270 rupees. You can think upon. And mid-size stocks are very good. Mid-size stocks are very good. Sectors blooming in future. So the sectors blooming in futures are, I said, IT sectors are one of the very good sectors. Banking now started performing well, and FMCG are always the rally players. Yes Bank can be retained for some more time. Yes, of course, Yes Bank can be retained for another 2-3 months. If we see, we have to see the Q3 results. If Q3 results are good, then we can think upon it. Well, that's what the same question is repeating. Why is there any misconception that higher PE is better? No, see, higher PE ratio, what is the formula for PE ratio? It is market price divided by EPS. That's all. So if the higher PE ratio is always sometimes better, but higher PE ratio is not always better. We have to focus on market price and EPS, and also number of shares, EPS when we are focusing, and profit. All those things if we focus, and if market price is higher, and if EPS is also good, and PE ratio is also good compared to other companies, then it is wonderful. If market price is if market is overly priced, okay, compared to EPS, even then the PE ratio will be more, but that is of no use. That will not give you the actual result. How to read chart? How to read chart, you'll have to, it is not easily understandable in one session. But see, you have a this one. And charts have many parameters you'll have to understand by taking some courses. Is Yes Bank a good buy? Not as of now. People who already have can retain and see. Any other questions? Someone has asked the question about Bitcoins. I am not qualified to answer about the Bitcoins, sir. Yes, it is better to retain Yes Bank for some more time. If you are in loss, if you have invested at a lesser price, say about 10-15 rupees margin ranges, then it is better to sell and book a profit immediately. Glitch in between. My suggestion, see, madam, I have to be very careful in suggesting the shares, but I can sell some generalized shares because I am not an investment advisor. I still suggest some of the shares. Say SBI, Airtel, Bharti Airtel is a very good share. SBI is performing well, and you can focus on TCS and ITC. ITC is also performing well. These are some of the key shares that I can suggest, which has a rally for a long time. HUL, of course, is a best share ever. Sun Pharma you can invest. No, I don't see future retail. Yes, automotive is one of the, I'm very sorry that I did not touch upon the point of automotive and also automobile. See, the companies are outperforming in automobile sector. They're basically, say, Kia has reported almost 140% of sales year on year compared to last December to this December. Even during a pandemic time, people are going and buying the cars, and the cars rate have tremendously increased. So automobile industry is some of the very good industry. And oil industry, someone asked about oil industry. I don't see any future in oil industry over a period of 2 years, because now the battery vehicles are coming, electric vehicles are coming. I don't see any shares that you may invest on oil industry. Yes, when to exit on any company? When you think that people have started selling, when there is a more selling happening in the market, that's the exact time that you have to go out of the market. You'll know from the statistics, you will know how many shares are being sold, how many shares are being purchased. When there is a huge transaction on selling side, it is better to sell and come out. Any other questions? Yes. If all the questions are done, I think we can surely close this session. And I thank all the ICI members for giving me an opportunity on the very second day of this year and starting this year with a wonderful seminar. Thank you very much. Yes, there are some more questions. See, volume is something very important on making a good profit. Volume is something very important. If you are playing in volumes, then you have to be very careful and play. Now, only with volumes you can make a huge profit or loss. So, volume are always a very important factor. If the result is good, then you are making a huge profit. If the results are bad, then you incur in a huge loss. So wherever you are more firm on the result, do with more volume. Wherever you are not very sure on the result, then do with a lesser volume, so that even for any uncertainties, you will not incur any huge loss. Yes. Thank you very much.
Thank you, Anil sir. On behalf of Bangalore branch of SARC, I take this opportunity to propose a formal vote of thanks for today's webinar. I thank Anil sir for spending your valuable time and giving an excellent presentation. Once again, thank you, sir, on behalf of all the participants and also on behalf of Managing Committee of the branch. I also thank all the participants for your participation and also valuable feedbacks. We shall catch up in the next webinar. Thank you so much.
Thank you.